All right, in today's video, I want to take a look at mostly at energy. So, I've been warning people in the newsletter and also on the blog that price, especially of the energy stocks, have gotten stretched too far above the 200-day moving average, and they were at risk of, either a very large and extended correction or some kind of crash event. I told people to, either just take profits, be happy with your gains. We, of course, we entered way back here in December of 2020, so we had made a lot of money on the energy stocks. So you could either just take your profits, be happy with it, or you could put a tight trailing stop on it, and it unfolded exactly as I predicted was going to happen. It was once the regression event started to occur, it became violent, and XLE shed 25% in 11 days. However, I am not sure the final run is over, or at least I think the bull market in commodities has many years to run, so I don't, I think this still has a lot of time, but we are getting late in the 3-year cycle. But I think we probably have one more push higher in this 3-year cycle. And so let me convert over to the chart of oil, and I'll show you what I'm looking at here. So the other day when we got this swing right here, it occurred to me that we might be looking at a triangle, and as many of you will recall, I suggested months and months ago that oil was probably going to be stuck going sideways through April and probably May, and maybe even through June, and that's what's happened. But it looks to me like it's forming a triangle pattern. Triangles kind of mess up the cycles, and oil doesn't have very dependable cycles anyway, so don't necessarily try and time the oil market with cycles. They just don't work very good. But this does look like that we're probably in a triangle in oil, and those tend to be continuation patterns. So once the breakout occurs, in this case, since price was going up, you would expect that the breakout is going to come to the upside. Now, we could tag this upper trend line, have to come down a little bit, maybe not all the way back down to the lower trend line, and then get a breakout. That's kind of what I think is going to play out. But it sure looks to me like this is probably a consolidation, and we're going to get at least one more leg up once this sideways consolidation is done. That could take oil to test those all-time highs at about $147. So, while it took much longer than what many people were expecting, and of course that to many people that means that Gary's wrong, it's not going to happen. Energy stocks are bulletproof, they're never going to go back down, and then exactly what I said was going to happen does happen, and we get a huge 25% correction. So then just a quick look at stocks, because the same thing is going to happen here. I'm going to be right in the end. The stocks are just stretched too far below the 200-day moving average. They're going to have a rally. There's even some statistics that would suggest that maybe we're trying to form the bottom of the bear market, and we're going to go back up and make higher highs. I'm not convinced of that yet, but I am aware of those statistics. We're starting to get these big volatile 5% swings back and forth in the stock market, and that has happened in the past near or at final bear market bottom. So this is frustrating people. It's wearing them out. Every time we get something that looks like we're about to start that bear market rally, it kind of peters out and then goes back down. I don't know if that's what happened here or whether we're just, the bears are trying to gain control, but they're not going to succeed. Hard to say, but I do know that every time this happens, it does the same thing I've noted before. It cements in traders' minds that in this case that it's safe to just short the market with impunity because it's never going to go back up. So this rally fails. Confirms that we're in a bear market and shorts are the only way to make money. This rally fails, more confirmation that shorts are the only way to make money. And again, like I said, I don't know whether this rally is going to fail and we have to go down and make a lower low again or not. But if so, that'll just be even more confirmation for traders that shorting is the only way to make money, and it's risk proof because the market can't go up. And then at some point, just like what happened with XLE, the trend will change, and it will catch all of these people that have let these failed rallies convince them that they can't lose money on the short side. It'll keep them holding on to those shorts far too long, and that will be the fuel to drive a really big counter trend move. So while this has been frustrating and it hasn't happened yet, I am going to be right, just like I always am on these calls. Eventually, we're going to get our major bear market rally, or maybe a resumption of the bull market. And the more times this happens where these rallies fade away, the more fuel it creates, because it convinces more and more people that they should just keep holding on to their shorts and they don't need to worry about these rallies because they always fail. And then we'll get one that doesn't fail, just like I said, just like what happened with the energy stocks. And then here, of course, is the classic example of that in Bitcoin. So I warned people that this was a bubble, and I said, every time we get this dip that it's bought, it cements in people's mind that there's no risk, and so then we get another dip and it's bought again, confirmation, no risk, another dip, it gets bought, more confirmation, another small dip, and then a push to new highs. So people become convinced that there's absolutely no risk. Bitcoin's going to $100,000, and then we get our warning shot across the bow. And this warning shot makes a lower low, but because people had become convinced that all dips have to be bought in Bitcoin, they either bought or they just kept holding on, and so we started to rally. And of course, people said, Gary's wrong. That Bitcoin is indestructible. It only goes up. 100,000 is coming, and then turns out Gary's right again, and we get this big move. And I said down here, I said most bubbles have, they either retest the top or they get a double top. So we come back up, and then the bulls come out again, and they say, obviously Gary was wrong. It did take a lot of months to recover, but Bitcoin is going to 100,000, except it wasn't. It was doing exactly what I said it was going to do. It was going to double top, and that's what happened here. We get this double top, and now the bubble has popped for sure. And all that happened was these bounces just convinced people that they had to hang on, and that if they did hang on, then they were going to get to that $100,000 target that they were projecting. And in the process, they failed to note the signs of a bubble. So I think at this point here, Bitcoin was about 200% above the 200-day moving average. Here it was about 150, 180% above the moving average. This is a sign of emotional buying. People that have become convinced that there is no risk, and unsophisticated retail traders just piling in at the very top. And same thing here. Price way too far above the 200-day moving average, and potential for a double top here. And then of course they get trapped and they hang on because they've been conditioned to expect that Bitcoin always recovers, it always goes back up, and maybe it will. The problem is that when a bubble pops, it usually takes a long time to recover. We saw the semiconductors, it took about 16 years for them to recover from that bubble that popped in 2000. So it doesn't mean that Bitcoin can't eventually come back up and eventually get to 100,000, but it probably means that it's going to be a long time wiping out the excesses of this bubble before Bitcoin can get a final bottom, and then make another run that maybe it will go to 100,000. I don't know, but it's pretty clear that the bubble has popped for now, and we probably got several years, maybe many years, before this would be ready to run again. So I am almost never wrong on these calls, especially these regression calls. But sometimes when a really strong trend gets started and you get multiple confirmations that the trend is still in place, it just takes longer than expected. But ultimately, I end up being right, and if you pay attention, then you either don't get caught when the energy stocks crash 25%, or you don't get caught here trying to short far too long in a market that is stretched way too far below the 200-day moving average, and due for at the very least, a very strong bear market counter-trend rally, and maybe a final bear market low. So, it remains to be seen here if this was the start of the counter-trend rally. The one fly in the ointment was this daily cycle was very short. Now, I will point out that this daily cycle was really long, so we were expecting a short one, but this was really short at, I think, about 16 days. So it is very possible that we have to come down and break this again. That gets the shorts emboldened even more, but also pushes this into a more normal timing range for this daily cycle. So instead of 16 days, it would be more like 20 plus or 30 days, and that would be more normal. And it would make the intermediate cycle a little bit more normal as well, because right here I think we're bottoming on week 16 or 17, and normal is usually like 20 to 25 weeks. So if stocks were to come back down and undercut this again and stretch this daily cycle out to a more normal duration and stretch the intermediate cycle out to like week 18 or 19, then that would be a little bit more what we would typically expect from a daily and an intermediate cycle. It would also embolden the shorts that there's no risk again, and then at some point, just like they got caught in energy, just like they got caught in Bitcoin, the shorts will get caught, and I'll be proven right again. But right now we're early, and that can happen during these really strong trending moves. You can get multiple moves that convince you that the trend is still in effect and that the trend can never end. But I always end up being right, and the trend does end. And then if you'd listen to me, you'll protect your portfolio, protect your profits. You could just be happy, take your profits, not try and catch every last penny. The people that were trying to catch every last penny in XLE got crushed, just like I warned was going to happen. The people that just keep shorting and shorting and shorting into the market here are going to get crushed. I'm going to be right on this one. And then finally, gold. Again, I'm being proven right again. I warned that this first daily cycle, very often they just kind of go sideways and they waste the entire first daily cycle, and gold just doesn't go anywhere. And then, of course, we've had some help. Obviously, this kind of crap doesn't happen in a natural market. You don't get a strong reversal, and with the dollar going up, and then you have this big sell-off the next day. This is just the metals are just hard. The cartel has a vested interest in the government and keeping metals suppressed. So that's why I say they're almost impossible to trade. The cartel will just whipsaw you to pieces. So for most of the money, my suggestion to subs is to just keep accumulating physical silver, because I'll say it again, that the cartel's going to win some of the battles. They're going to win a lot of the battles, but they aren't going to win the war. And if you're accumulating physical, you're going to be there at the end of the war when gold goes to 5, 7, 8, 10,000, and silver goes to, like I said, 100 is going to be a piece of cake. And by a piece of cake, I don't mean that it's going to be easy to get there. It's going to be really hard to get there. But by a piece of cake, I mean it is going to get there. And, it could very well go to $200 or $250, maybe even $500 during a final manic bubble phase. And if you're accumulating physical silver, you're going to be there. If you're trying to beat the cartel at their game and trade these erratic back and forth wiggles, they're gonna whipsaw you to death. So gold, again, doing exactly what I said it would do, going sideways, churning, wasting the entire first daily cycle. I don't know that this is the bottom of the first daily cycle. I kind of just think maybe we're going to get a little closer to testing this. My original guess is that we aren't going to break this, simply because this intermediate cycle was so long. If we were to break it again, then that would stretch it out even further, which would be just insanely long on the intermediate cycle. So I kind of think that the first daily cycle is going to hold this low. It's not going to make a lower low. So I'm kind of watching the 200-day moving average. It's pretty clear here. The cartel's trying to keep gold suppressed below that 200-day. So I'm going to guess that once we get a move above it, and probably not just one day above it, but we're going to need to hold above it for a couple days, maybe 3 days, before I'm convinced that the cartel's been defeated and that the first daily cycle low is over and the second daily cycle is started. But, I've been right again on this one. Difficult sideways, almost impossible to trade. But once we start that second daily cycle, then I think we got an opportunity to maybe get some upward momentum and start making some higher highs and maybe probably test this all-time high here before the intermediate cycle rolls over again.